A recession could mean the opportunity of a lifetime for those that are well positioned. Making the right moves could put you in a place of prosperity for the rest of your life and create generational wealth for your family. For others who are ill-prepared, this means looming financial devastation. In order to come out on the other side in a much better position, you should know exactly what moves to take. Make sure to watch the whole video because a few extra minutes of research on your part could translate into once-in-a-lifetime financial gain. My name is Ketchel and I help teach people about money, personal finance, and investing. If you're interested in improving your financial future, make sure to subscribe to the channel and hit the like button if this video is helpful. It's normal to feel worried when a recession presents itself, and being a little leery can hurt, but you can't let news of potential financial disaster disrupt your long-term plan. If you're dedicated to building wealth, you need to be prepared for negative times. Keep a clear mind and pay attention to your long-term goals and what you need to be doing now to stay on course. The potential for occasional financial setbacks is simply a part of building wealth. You shouldn't become discouraged, and these occurrences shouldn't come as a surprise. One tip is to track your progress over time on an annual, biannual, quarterly, or even monthly basis. When it feels like you just can't seem to make any headway, look back on your figures, and you'll see how you're progressing, even if it doesn't feel like it. There's one thing for certain, and that's when you pay down debt, it's like earning a guaranteed return. Say you have $500 that you're either going to use to pay off a credit card debt at 30% interest or invest in the stock market. Putting that money towards your credit card balance will guarantee you a savings of 30%. So it's like earning a 30% return on your investment. Alternatively, if you put that money into the stock market, you might make money, but you could also lose money. A guaranteed profit, or in this case, a guaranteed savings, is something to consider. What can you do now to accumulate a pile of cash that's ready to be deployed when opportunity appears? Not only will this money be available for investments, but extra cash will serve as an extra buffer if you're faced with a major catastrophe. In addition to a standard 3 to 6 month emergency fund, this is a good time to empty out your garage and sell items that are just collecting dust or have a yard sale. Do you have any skills that you can use to earn a little extra money during your free time? While the last thing you'll probably want to do is spend extra time at work, if you can put in a few more hours here and there, that's something to consider. If you've been throwing extra money towards low-interest debt, consider only paying a minimum payment for a little while and reallocating those funds towards savings. Instead of paying extra towards your low-interest home mortgage, adding that to your cash pile might be beneficial during times of turmoil. You're never going to regret having an extra well-padded savings account. Part of saving cash is avoiding large purchases or at least putting them off to a later date when the dust has settled and the future is looking more promising. When interest rates are spiking, markets are dropping, and there's word of layoffs, it's a bad time to make major financial moves. Why take on those additional costs if you don't need to? It's not the best time to take money out of savings and plan a home renovation or start construction on the pool you've been planning in the backyard. Any large, unneeded purchases should wait until they're absolutely necessary. Keep in mind that anything you're able to save now could potentially provide exponential returns over the coming years. A rising tide lifts all boats, meaning when the economy is in a period of growth, investments, regardless of their quality, tend to perform well. As markets trend upwards, even novice stock pickers tend to pick winners, and just about everyone you know is bragging about their golden touch. And real estate over the long term, only the ones who invest in high-quality assets are going to continue making money while the others are going to be wondering where things went wrong. Analyze your retirement accounts, as well as other investment accounts, and take a close look at exactly what you're investing in. Which stocks or funds, in particular, do you plan on further contributing to, and which are you going to pile money into? You'd be surprised to see just how many people continually put money in a 401k or IRA and have no idea what they're actually buying. During recessions, stocks of great companies are often going to be trading at a bargain price as the market will price them unfavorably due to fear. Investors are scared of what the future will hold, and they sometimes pull money from the market, consequently reducing prices. This is an amazing time for long-term investors who are prepared to take advantage of these major discounts. While it's unreasonable to expect to successfully time the market, deploying available cash when stocks and funds have seen huge price drops is a great way to potentially boost your returns. Stock prices drop, but you might want to steer clear of purchasing them individually to reduce your chances of losing money. Focus on buying high-quality index funds and ETFs, as these have a high chance of recovery and a relatively low risk. When compared to single stocks and cryptocurrencies, even a fund such as the S&P 500 can potentially be purchased at a significant discount, and there are many variations of a fund like this. For example, you can choose an S&P 500 Growth Fund, S&P 500 Dividend Fund, S&P 500 Value Fund, or virtually any other variation. The potential profit with these choices is huge, so don't feel the need to branch out and explore high-risk options with retirement savings. Rich people know the importance of having an abundance of cash on hand, so they have the means to scoop up these amazing deals in the market, which is one reason why the rich get richer. Being ready to act on these incredible opportunities is going to boost your profits considerably, but don't plan on using that money anytime soon. Be prepared to wait 3 to 5 years for the market to recover before accessing that capital. Otherwise, you don't need to decide when to deploy additional money into the market. You could simply increase your regular investment contributions. Dollar cost averaging is a mindless, hands-off approach that can still allow you to take advantage of those discounted prices without becoming overwhelmed with market volatility. If you've been waiting to venture into real estate investing, a recession could mean opportunity. The people who were previously doing well financially could now be finding that they need to sell. Uncertainty can spook other investors and drive them away from investing in real estate, resulting in a better entry for those wanting to get in. Demand for rental homes could also increase due to a variety of reasons. Even though real estate prices don't typically see a substantial drop during a recession, there's a higher chance of finding a distressed, motivated seller. Just because the economy enters a recessionary period doesn't mean all businesses are going to suffer. Many companies will see a decrease in sales, particularly those in non-essential industries. But there are certain businesses that are going to thrive and do better than before. The owners of these businesses are going to become massively wealthy, similar to what we saw during the pandemic. Many businesses closed down and lost money, while others saw incredible growth. What type of side business could you start that there's demand for regardless of the economy, or even better, one that's going to thrive in a poor economy? There are a variety of businesses that people need regardless of whether or not the economy is growing, including many home services, automotive services, pet services and products, and so on. It's a matter of using your knowledge, interest, and skills to choose something that could allow you to profit during a recession. A recession means a chance for you and your family to build long-term wealth, but only if you've made preparations. You need to be ready to act when these opportunities present themselves. They don't come often and they don't last long, so preparing well in advance is critical. Making the right moves during these times of uncertainty and distress will reward you many times. Thanks for watching. Don't forget to like the video and subscribe to my channel. See you in the next video.